The wealth gap is wider than ever. The richest keep getting richer, and the poorest keep falling further behind. Today we're exposing the shocking truth: how banks profit from the struggles of the poor. Get ready to be outraged and ready to act. This is about more than money. It's about justice and fairness. We're told banks are pillars of our economy, but are they really here to help us? While the wealthy enjoy minimal fees and preferential rates, the poor face a different reality. We'll expose how banks perpetuate poverty and arm you with the knowledge to fight back. Banks are often seen as neutral, but they act as engines of inequality. They create a two-tiered system, one for the wealthy with low-interest loans and high-yield investments, and one for the poor with predatory loans and exorbitant fees. We'll delve deeper into how banks contribute to the impoverishment of millions. Imagine your potential for profit assessed based on appearance, zip code, and skin color. Banks often perpetuate systemic inequalities by favoring the wealthy and discriminating against the poor. This discriminatory lending has a devastating impact on communities of color, hindering their ability to build wealth. If banks are so bad, why do people use them? For many living paycheck to paycheck, traditional banks aren't viable. This leaves them vulnerable to alternative financial services marketed as quick fixes, but are often predatory. As banks retreat from low-income areas, predatory lenders exploit the financially vulnerable. Predatory lending is like luring someone into a back alley with a deal too good to be true, then hitting them with hidden fees and impossible terms. Payday loans, for example, come with exorbitant interest rates, trapping borrowers in a cycle of debt. These practices thrive in the shadows, exploiting loopholes and lax regulations. Why do people fall prey to predatory practices? Often, they have no other choice. Predatory lenders target low-income neighborhoods, creating an illusion of empathy while trapping people in debt. These practices wouldn't be possible without lax regulations and government inaction. Let's dissect a typical predatory loan. A small loan can quickly snowball into unmanageable debt. Exorbitant interest rates, hidden fees, and short repayment terms trap borrowers in a cycle of debt. Predatory lenders make it easy to roll over loans, digging borrowers deeper into debt. Predatory lending is designed to keep people trapped, profiting from desperation. The constant stress of debt affects mental health, relationships, and overall well-being. But there is hope. Awareness and understanding your rights can help break free from the cycle of debt. Section 1. The Fee Frenzy. All right, let's talk about fees, shall we? banks love finding creative ways to take your money under the guise of administrative costs and service charges. And guess who bears the brunt of these fees? Those who can least afford it. For low-income individuals, banking can feel like navigating a minefield of hidden charges and financial penalties. It's almost as if banks have designed a separate, more expensive banking system specifically for the poor. But wait, there's more. Banks don't just stop at monthly fees and overdraft charges. Oh no, they've got a whole arsenal of sneaky fees designed to nickel and dime you into despair. It's death by 1,000 cuts, financial style. Let's talk about ATM fees. You need cash. You go to an ATM that's not affiliated with your bank, and bam, you're hit with a fee, often around $2 to $3. It might seem small, but those fees add up, especially if you're living paycheck to paycheck and relying on cash for everyday expenses. Then there are the paper statement fees. You want to receive your bank statement by mail? Sure, but it'll cost you. Banks are increasingly charging fees for paper statements, pushing customers towards online banking. While online banking can be convenient, it's not accessible to everyone, especially those without reliable internet access or who are uncomfortable with technology. So they're essentially being penalized for not having the same digital access as others. And let's not forget about the inactivity fees. You haven't used your account in a while? Well, that's too bad. Some banks will actually charge you a fee for not using your account enough. It's like they're punishing you for not generating enough profit for them. It's the financial equivalent of a participation trophy. But instead of a trophy, you get a fee. Now, you might be thinking, surely banks offer some low-cost or fee-free options, right? Well, yes, but there's a catch. Those options are often reserved for those who need them the least, the wealthy. It's a classic tale of two banking systems, one for the haves and one for the have-nots. Wealthy individuals often have access to premium banking packages that come with a laundry list of perks, waived fees, higher interest rates on savings accounts, personalized financial advice, and even access to exclusive investment opportunities. They're treated like royalty, catered to, with personalized service and exclusive benefits. Low-income individuals, on the other hand, are often relegated to basic banking accounts with minimal features and a plethora of fees. These accounts might not offer overdraft protection, have low withdrawal limits, or come with restrictions on the number of transactions allowed per month. It's like they're being punished for not having enough money to qualify for the good banking experience. This disparity in banking options further exacerbates the wealth gap. Wealthy individuals are able to grow their wealth faster and more efficiently thanks to lower fees and access to better investment opportunities. Meanwhile, low-income individuals are stuck paying higher fees, earning lower returns, and struggling to make ends meet. It's a vicious cycle that keeps the rich getting richer and the poor getting poorer. It's time to call a spade a spade. These excessive bank fees are not just an inconvenience, they're a form of regressive taxation. They disproportionately impact low-income individuals and families, taking a bigger bite out of their already stretched budgets. It's the cost of being poor in a system rigged against you. Think about it. If you're living paycheck to paycheck, even a $35 overdraft fee can throw your entire budget off track. It might mean choosing between buying groceries or paying rent, skipping a doctor's appointment, or putting off essential car repairs. These fees have real-world consequences, pushing families further into debt and making it even harder to achieve financial stability. And here's the kicker. Banks know this. They know that low-income individuals are more likely to overdraft, more likely to incur fees, and less likely to close their accounts even when faced with excessive charges. It's a captive market, and they're exploiting it for profit. This isn't just about bad business practices. It's about social justice. Access to affordable and equitable financial services is crucial for a fair and just society. When banks prey on the most vulnerable among us, they're not just hurting individuals. They're undermining the fabric of our communities. It's time to demand better, to hold banks accountable for their actions, and to create a financial system that works for everyone, not just the wealthy few. Let's take a drive, shall we? But this isn't your typical Sunday cruise. This is a journey through two different Americas, two different financial realities. Buckle up because the view might be jarring. On one side of town, you see gleaming skyscrapers, luxury boutiques, and of course banks. Lots and lots of banks. They're on every corner, beckoning customers with promises of personalized service, exclusive investment opportunities, and a safe haven for their wealth. Here, banking is seen as a right, a given, a seamless part of everyday life. But now, let's cross the tracks, metaphorically speaking, and enter a different kind of neighborhood. The buildings are older, the streets are quieter, and the opportunities seem fewer and farther between. You notice something else missing: banks. Those ubiquitous symbols of financial stability have all but vanished. In their place, payday lenders, check cashing stores, and pawn shops, the predatory cousins of traditional financial institutions. Welcome to the banking desert. These are geographical areas, often low-income neighborhoods and communities of color, where access to traditional banking services is severely limited or non-existent. They're financial wastelands, where residents are denied the basic tools and opportunities that many of us take for granted. Imagine for a moment that you don't have a bank account. You can't deposit your paycheck directly, can't write a check, can't build credit. This is the reality for millions of Americans living in banking deserts. Without access to traditional banking, they rely on fringe banks. These include payday lenders, check cashing stores, and pawn shops. These services come at a steep cost, trapping people in debt. The less money you have, the more expensive it is to manage your finances. Why do banking deserts exist? Banks are businesses driven by profit. Historical and systemic racism, like redlining, plays a role. Rural areas face distance and lack of infrastructure. Limited financial literacy also contributes. This perpetuates poverty and limits economic mobility. True equality requires equal financial opportunity. Remember those glossy brochures and persuasive commercials? Behind those seductive images often lies a harsh reality: the debt trap. Banks love to lend money. It's how they make a hefty chunk of their profits. But they don't always care if you can actually afford to repay that money. They dangle tempting offers, burying the fine print that can turn dreams into nightmares. By the time you realize, it's too late. You're already drowning in debt. Let's talk about interest, shall we? It's the silent killer of financial well-being. The hidden cost that can quickly turn a manageable debt into an insurmountable burden. Banks are masters of wielding this powerful weapon. Interest isn't just a fixed fee. It grows over time, feeding on your principal balance. The longer it takes to repay, the more the interest monster feasts, making it harder to escape. It's a profitable business model for banks, but it comes at a steep human cost. The American dream of homeownership can quickly turn into a nightmare. Banks sold dreams with predatory loans. Remember the 2008 financial crisis? Adjustable rates, skyrocketed payments. Homeowners faced foreclosure. The government bailed out banks. Taxpayers footed the bill. A cautionary tale of greed. Remember 2008? The global financial crisis? Millions lost their jobs, homes, and savings due to reckless bank bets. The government responded by bailing out the banks with trillions of dollars. Banks privatized profits and socialized losses, leaving taxpayers to clean up the mess. It's time to hold banks accountable and create an economy for everyone. So, the banks are bailed out, the crisis is averted, and we're told that everything is going back to normal. The economy is recovering, the stock market is booming, and all is right with the world. But here's the thing. That recovery often feels more like an illusion, a carefully constructed facade masking a deeper, more insidious truth. While the wealthy celebrate record profits, the rest of us struggle to make ends meet. Wages remain stagnant, the cost of living rises, and the gap between the haves and the have-nots widens. Policies like quantitative easing benefit the wealthy, while essential services become unaffordable. It's time to rewrite the rules, to create a system that prioritizes people and planet over profits. So, there you have it. Banks often keep the poor trapped in a cycle of poverty. Predatory lending practices prey on the desperate, excessive fees bleed dry those already struggling, and essential services are reserved for the wealthy. Government policies protect the powerful, leaving the vulnerable exposed. It's a rigged game, folks, and the house always wins. So, what can we do? How do we fight back against a system that often seems designed to keep us down? There are things we can do, both individually and collectively, to level the playing field. Knowledge is power. Learn about personal finance to navigate the system. Consider credit unions or community banks for fair financial services. Support organizations fighting for financial justice, and contact your elected officials. Use your voice and vote to hold those in power accountable. By working together, we can build a financial system that works for everyone.